Welcome to the Commercial Real Estate Academy podcast, the podcast dedicated to simplifying the commercial real estate industry for the masses. Each week, we sit down with industry experts to dissect the many facets of commercial real estate and extract valuable lessons you can apply to your business. Whether you're a new or seasoned business owner or investor, the Commercial Real Estate Academy podcast will be your go-to resource for all your commercial real estate needs. Now, here are your hosts, Raphael Collazo and Jeff Walston.
Welcome to the Commercial Real Estate Academy podcast. I'm your host, Raphael Collazo, here with my co-host, Jeff Walston. How's it going, my friend?
Yeah, it's going great here in Louisville, Kentucky. I would say sunny, but the weather's rainy, but we need it. And but besides that, excited about business. With our episode here, and I just love meeting new people, and so I'm excited for everyone to listen who's to come in the next episode. So, how about you, Raphael? How are you doing?
Same. And I'll say it is sunny, but it's just covered by clouds. That's all.
Yeah, there you go.
That's the only. So we're always positive on the show. We're always positive. Yeah. You got to look at the bright spot. But yeah, speaking of bright spots, kind of leading into our podcast guest, it really was a bright spot of our day to interview Bryan Flaherty. He's a buddy of ours and actually a managing partner at CF Capital LLC. We interviewed his business partner, who's another friend of ours, Tyler Chesser. He's one of our early podcast episodes, I think our second one. So they're just a dynamic duo here locally, and they've really just grown their private equity firm for primarily in multifamily real estate over the last year or two. And they're really going to be massive players in the space going forward. But during the episode, we focused on a variety of different topics. One being, why did Bryan get into commercial real estate to begin with? Because he didn't have a commercial real estate background. He was operating on Wall Street primarily, and then kind of made that decision to transition into commercial real estate, and in particular into brokerage, where he learned by transacting, which is something we talk about a lot on the podcast. Some of the benefits of getting in the brokerage business to be able to learn how to transact within the industry. Along with that, he explained a little bit about his leap of faith into entrepreneurship, kind of leaving that corporate W-2 job and taking a leap of faith into a fully either a commission job, and then eventually starting his own private equity firm where literally it was eat what you kill. Trying to find deals in particular in an environment where, COVID affected everyone. So it was definitely a unique insights that he provided there. And then we also discussed various different strategies about how they identify opportunities within the multifamily market and raise capital for those deals once they find a deal that it can actually be of benefit to them. And then finally, we rounded it out with just kind of giving a forecast of where he sees the multifamily market going over the course of the next 5 to 10 years. So really, really loved speaking to Bryan as always. I think he has a wealth of knowledge, is a voracious reader, and really provided a ton of great insights during the podcast episode. Jeff, do you have anything else you want to add?
No, you pretty much rounded it out. I love his why. I think is similar to a lot of people's. It's his family, and but the value that he's added to their lives and he'll continue to add is worthy of note. So yeah, like Raphael said, wealth of knowledge here in this episode. So excited for you guys to take a listen.
Yeah, of course. And I like Jeff said, I really do believe this is going to be a very, very valuable episode for you guys. So without further ado, let's go ahead and dive right into the episode. Well, hey, Bryan, great seeing you this fine morning.
Raphael, Jeff, good morning. How are you guys?
Cannot complain. The weather here is not the greatest, but I hear the weekend is going to be a lot nicer. So looking to take advantage of that. I actually have one of my good friends coming into town this weekend. So we're going to be exploring all over Louisville, hopefully make it down to Lexington and then maybe Cincinnati, depending on if time permits, but should be a fun-filled weekend.
Good for you. Yeah. Good things on the horizon, which is always fun.
Oh my God. Yeah. And there's a lot of positive energy and everything around us. So we're very happy to first off have you as part of the podcast. I know we've had, I've met you almost a year ago now through Tyler, and right. He was one of our earlier podcast guests. So we're really excited to kind of learn a little bit more about you two in general, and primarily you, because I've obviously had an opportunity to speak to you on several occasions, but getting to deep dive into your background, I'm really excited about it. So I think a lot of our audience is going to gain value from it. So before we do anything, typically what we do is we like to have our guests kind of give us a background on themselves. So can you tell us a little bit about yourself, and just go take it from there?
Yeah, sounds good, guys. Well, thank you all again for having me. It's a pleasure to sit down, chat with you guys, and hopefully the audience will interact and get something from this as well. But yeah, who am I? Kind of the man behind the bio, I guess. In our industry, everyone's all about their bios and what we can put in there and letters behind our names, things like that. But For me, man, you can't describe me without starting with a husband and dad. So I'm happily married. We've got 3 kiddos at home. I've got 2 little boys, age 5 and 3, and a baby girl as of today, which we're recording in October of 2021. Baby girl is 5 months old. So those are what I would call my whys in life, and why I show up every day the way I show up, or those on the home front. But yeah, I'm a co-founder of CF Capital, a private equity investment firm located here in Louisville, Kentucky. The Tyler you were mentioning, as we got things started off there, is Tyler Chesser. So he is my business partner and co-founder of CF Capital. And I'll leave it up to you, Raphael. I mean, do you want to talk a little bit about how we got here? How did I end up co-founding a private equity investment firm, or where would you like to take it as we kick things off, my friend?
No, so I think we're going to dive into that as well. I think you gave a quick synopsis on who you are as a person, and hearing about your whys, I think very important as well, because this is obviously a commercial real estate podcast, but there's a reason why we're in real estate, right? There's definitely always going to be a motivation. And it's great to hear that your motivation obviously is your family. I know family is extremely important to myself, and I know it is Jeb as well. He has 2 kids that really are his why as well. So kind of getting you a high overview of who you are is obviously of benefit. So thank you for that.
Yeah, absolutely.
I know you were saying, in the equity firm and the CF Capital, but what got you interested in commercial real estate?
Yeah, Jeff, great question. I think you got to back up, probably over a decade to really get to that answer. And, like a lot of folks, and I'm sure a lot of your listeners, I grew up in a household that put a high priority, on education and a stable corporate job, and kind of riding it out in the workplace and working your way up the corporate ladder and hopefully ride off into the sunset, at age 65 in a day. So I did that. I went to work in corporate America. I was working for a global consulting firm, probably top 100 Fortune firm. So for a lot of people, like, fantastic, you've made it. Like, just start climbing now, And I was really trading time for dollars. And it was about a year or so into that, and I said, man, there's got to be something more out there for me, personally. Not that is the wrong way to go, kind of globally. It's just for me, my fit. I knew for myself, I had to have more out there. Now, what that more was at that time, I had no earthly idea, to be candid. I kind of looked at myself and said, what's next? What do we do? Where do we go from here? Came up with no answers. Ended up saying, well, you know what? Let's go get more educated. Let's go to get my MBA. So I did that. Had an undergrad from the University of Kentucky, again, located here in Louisville, Kentucky. Decided to get my graduate degree from Indiana University and said, hey, that'll set me up for success. That's a, top 20 business school in the nation. Like, let's go that route. So did that. Ended up coming out of B school, working for a firm located here in Louisville, but was an equity asset manager. So essentially a stock picker. And we worked on Wall Street, just located here in our backyard. And at that time, Wall Street's a fun time. The bright lights, the big cities, like, I was flying all over the country. Life is good. We're making, starting to become successful, make some success. But at the same time, those whys I just talked to you about were starting to kind of come about. And I was getting married, and I knew kids were on the horizon. And I said, man, I can't, fly to New York this week and Texas next week and California the week after. Like, sounds fun, but man, that's not going to allow me to show up and be the dad that I know I want to be in the future. And so that time, that's when I started having a lot of those internal conversations and saying, what else do I want? What do I want to be outside of the corporate world? And I picked up a book for the second time. I probably should have mentioned this when I was kind of doing my searching and before I went to business school. I picked up that little purple book that, a lot of your listeners have read, Rich Dad Poor Dad by Kiyosaki. And I was so ingrained and entrenched the other way. When I first picked it up, I couldn't finish it. I was like, what is this? This is kooky. Like, what is this guy talking about? So I didn't even get through Rich Dad Poor Dad the first time I read it. I didn't have that aha moment like so many people talk about. Well, as I'm now on Wall Street and kind of looking to say what else is out there, for some reason, I picked that book up again to say, hey, man, I never finished that. Like, what was that book all about? And maybe it was just right place, right time, but that's when it kind of clicked for me. And I said, okay, that's it. I like the equity world. I like stocks, but there's something else, because at the end of the day, if I do that, I'm still trading time for dollars. I'm still working for another big group and making them very wealthy. And I was on this path where I was still working to a point, amassing some sort of treasure trove. And at the end of the day, it's kind of a grim way to look at it, but when I look at retirement, one of two things is going to happen. Either your big bag of cash is going to run out while you're still alive, or you're going to croak. And it's kind of a race to the bottom there. And I said, man, this Kiyosaki guy's got it figured out. Like, instead of just amassing, this pool of money, I need to have money come to me. Like, I need to open up streams of income and bring them my way. So at that time, I said, you know what I need to do? I need to pivot out of kind of this institutional Wall Street world and into real estate. At that time, I wasn't exactly sure what it was that I was going to do in real estate, but I knew I had to get there, and I knew I had to get to the principal side and owning things. And again, kind of bringing the money, the cash flows back to me. And I didn't know anything about commercial real estate. Like, all I knew about real estate was the home that I'd kind of cobbled some dollars together and bought, and the home that I grew up in. And, the idea of owning apartment complexes or office towers and retail investments, like, total foreign concept to me. And so when I originally thought, yeah, I'm going to get into real estate, I'm going to buy all these single family homes, we're going to have all this money coming to us every month, yada, yada, yada. And maybe the analytical side of me said, okay, what does this look like? Like, let's put this down on paper. And after I crunched some numbers and made some assumptions and said, if I use my money and I can buy this many homes a year and they're going to net me out this much, it's like, hey, great. In about 120 years, I think I'll be able to get to the monthly income that I'm going to want to get to. So I said, well, that's not going to work. So what else? What else can we do? And, at that time, I started leaning on some mentors and some colleagues and kind of just throwing out there what I wanted to do and where I wanted to get to, and, kind of help them paint the roadmap for me. And I eventually formulated in my mind what was going to fill my cup up, was to say, hey, I have this, kind of institutional background. I want to do that in the commercial world. What appealed to me the most as I started getting into commercial real estate just happened to be apartments, multifamily apartments. I don't think that there's a right industry or sector within commercial real estate, and I don't think there's a wrong one. I think everybody, needs to kind of figure out which one speaks to them the most. Personally, I'm not interested in retail. I'm not interested in office. I know a lot of folks that love it. I think that's fantastic. There's a lot of people that would look at what I do and say, absolutely no way. I cannot do that. So it's just kind of finding your niche in the industry. And I said, okay, that's it. I want to be a principal in the multifamily industry. I want to go out. I want to put deals together. I want to raise money, and I want to build a portfolio of apartment complexes. And, keep in mind, I'm still working on Wall Street. So it's a pretty big gap at that point. And I say, how can I bridge that gap? How can I put the roadmap together? And to me, I said, you know what? I think the best way to do it is to get the exposure. And I can either, go try to work for some sort of similar firm and see some deal flow that way. Or I chose another path, which was to go to the largest global real estate firm in the world, commercial real estate firm in the world, CBRE. It was actually a broker for the transactions that we now acquire. So in my mind, I said, let's go be a broker. Let's figure out how successful firms are doing it, learn from them, kind of use everything that they're doing. And in Tony Robbins' way, turn some decades into days and say, this is how you finance it. This is how you buy it. This is how you manage it. And, learn who the players are in the areas where I wanted to buy. And, learn who to buy from, who not to buy from, learn who to partner with, learn who to say, kind of thanks, but no thanks to, and really start developing those relationships. So I went to CBRE, spent a number of years there until it was kind of my time. I was blessed and fortunate to find my business partner, Tyler Chesser, along the way. It's funny, Tyler and I met in a CCIM class a number of years ago. CCIM, for your listeners, is kind of the largest designation in the commercial real estate field. I always thought when I left off that cliff and said, I'm going to go do this and own my own private equity company, was like, I'm going to do it all by myself, which looking back proves how green I truly was, because what we do is the ultimate team game. And so I was blessed again to find my partner, Tyler. We balance one another out and have kind of shared interest. But it was in March of 2020 where we kind of soft launched the firm, to most of our friends, families, and colleagues. And it was about 8 days later, the president came on TV and kind of announced to the nation what COVID was. And in our minds, we said, oh my gosh, like this is going to be, the shakeup we need in the, from a financial perspective. But anyways, we can get into kind of all that in the future. But fast forwarding about a year and a half later is where we're at. But Jeff, does that kind of answer your question? I know that was a bit long-winded and a little bit about the background and how we got to where we're at today here, owning the private equity firm CF Capital.
Yeah, I mean, absolutely. Yeah, you definitely answered it. And it wasn't long-winded. I mean, you have a journey, right, that got you interested in that. And that's what we were asking of you. So you really hit it out of the park.
Yeah, and it's always good to hear the thought process of someone, which we'll dive in a little bit later. Like you kind of referenced when you read Rich Dad Poor Dad, that initial reading of the book wasn't that aha moment, but the second time around was when the lights clicked on. And, everyone kind of has that exact same moment, whether it's through Rich Dad Poor Dad or maybe an experience they had in their job, or, I wrote a book called The Compound Effect that kind of did it for me. There's different ideas that come about through our experiences that can really dictate the next decade of our life, so it's great to hear that feedback. And one thing you touched on, which I think was really interesting, is your experience in brokerage. And I kind of had that exact same type of logic when I transitioned from my engineering background into brokerage. But what are some of the top lessons you learned from that experience? Because we do have a lot of people that are listening to the podcast. They're aspiring commercial investors. Maybe they're currently either in the brokerage space or developers, et cetera. But what were some of the experiences or lessons you gained from the experiences as a broker that you gained extreme value from, and now you continue to apply those lessons in your private equity fund?
Yeah, great question, Raphael. I mean, it's like, how much time do you have? What lessons did we learn? But keep in mind, I wanted to learn all the lessons. Like that was strategically my reason to go into brokerage, to say that's going to give me the most transaction volume, and that's going to help me go from 0 to 60 as absolutely fast as possible. So I learned both, man. I learned all the good things, and I learned a lot of the kick in the teeth things, but luckily not with my own capital. I saw other, colleagues, unfortunately, not perform as they should, and made very good mental notes of those and exactly what happened, what went wrong, why it went wrong, how it could have been avoided. Similarly, I noticed, man, there's a lot of fantastic colleagues that we have in our industry. And thankfully, most anyone, whether they want to admit it or not, they got a little bit of help on the way to that success in their journey. And the majority of them are willing to pay that forward. So, man, I pick the ear of anyone that would listen to me on the principal side specifically. Like, yeah, we would work on a transaction, but throughout the process or, mid-process, I would sit them down and say, hey, like, let's get everything done with the transaction. Now let's set that aside. Now let me put on my principal hat and ask you questions. How are you doing this? Why are you doing this? Who are you doing this for? I mean, at first I was as green as they could be. And it was like every transaction, every quarter, every year, just keep stacking on that knowledge so that I could replicate it. And my thought process was, given my exposure, I get to see all these successful folks and almost get to cherry pick best practices from them and say, Group A does this well, Group B does this well, Group C has this relationship. And I can take the best of the best and bring it back to my firm and really use that as the foundation to build our firm with.
100%. And learning by transacting, that's something that we talked about with Tyler on the previous podcast, is getting a feel for how this process works from start to finish, and then understanding the players that are involved in the transactions and what the best practices are, which I love the fact you said that, because not everyone that transacts in the business is going to be doing everything right. So you can take those mental notes without having to expend a significant amount of capital, which you guys are doing now. I mean, you're buying multi-million-dollar multifamily properties with capital that you raise from various different groups, but you utilize those lessons that you learned years ago during the transaction phase of your career in the brokerage side to now apply towards making your investors a great return. And so that's one of the lessons that I really want our listeners to take hold, is that there's a method to the madness. There's a reason for entering the profession from the brokerage side, because I think it's one of the best ways to learn the business. And then from there, you can apply all the lessons you learned into becoming a principal. And then long-term, whatever your goals are, you can achieve. So.
Oh yeah, completely agree with you, Raphael. So on the entrepreneurship side of things, so you took a leap of faith and you went out and you started with CF Capital. It's all a learning process, just like you said, and you pick people's brains. But what has been some of your biggest challenges this far?
I think the biggest one that most folks have to struggle with is I'll touch on this, is that jump from your corporate W-2 guaranteed paycheck coming every week, 2 weeks, whatever, to how am I going to put food on the table? And I know that was something that for a while I had to struggle with and kind of get over that, mental hurdle. And I had some self-limiting beliefs around that, but I had, again, a unique way to go about it. So I left the W-2 and the year-end bonus and all that kind of comfort in the box comfort stuff that you want, and knew that going, full speed ahead to owning my own firm, I'm the one that's got to put food on everyone else's table and pay everybody else. Well, keep in mind, as a broker, it's kind of like training wheels to get there. I had the big corporate flag firm behind me, which was nice to open some doors, and I was able to join other brokers on some deals that they were doing and bring some value and be able to get a little bit of income from that. But I always kind of say I had a nice transition where I didn't just leap straight into the deep end and say, I quit, I'm out of here, W-2, and now, on to the next thing. But I kind of stepped into that where I said, okay, I'm going to step into a brokerage type of environment where I am an independent contractor, and it is you have to produce to get any results. But I was supported by, again, the corporate flag and some teammates along the way before ultimately getting to the point where I was comfortable going off on my own. So I think that's probably the biggest hurdle anyone that leaves a corporate environment towards getting into entrepreneurship needs to get over. I know a lot of people say, it's funny, we'll talk to folks and they'll say, yeah, I think I want to use this, kind of the past 18 months have been a transition for a lot of folks, and say, I'm going to do it on my own, and I want to control my own schedule, and, I want to be able to work when I want to work. And entrepreneurship certainly has lots of pluses, but at the same time, there's hardships. Nothing comes easy. There's plenty of headwinds that come along with that. I always laugh at folks that say, I want to work when I want to work. It's like, so you want to work all the time? Because when you're pulling things up by the bootstraps and kind of getting things started by yourself, that's a lot of what it is. But yeah, I mean, I think those are some of the biggest things that you kind of have to get over as you get onto the exciting adventure that is entrepreneurship.
Definitely. No, and making that transition again is a lot of mental thought process. I read this book. I can't remember the exact name of the book, but it was Taking a Leap, I think is the name of the book. And it talks about this gentleman who was at BCG for a long time as a corporate consultant, exploring the option to go become a professional squash player. And he was thinking about it for the longest time. And he thought, well, this would ruin my career if I, for some reason, decided to transition over there. He was very much on the corporate path to, whatever he really wanted to do. And so what he did to be able to kind of get his mental state to the point where he could make that transition. He started interviewing people that from all different industries that make some type of leap, whether you're like some corporate attorney decided to start a carpentry business, or a Marine that transitioned into becoming a journalist. So he documented all these different types of transition points for all these different people. And he found a common theme about what actually transpired. And the common theme was that they were all glad they did it. So, the transition point is the scary part. But once you get on the other side, obviously there's going to be struggles. Obviously there's going to be things you're going to have to deal with. And it may take you years to overcome them. But at the end of the day, if it's right for you, because not everyone is cut out to do entrepreneurship, and that's completely fine. But, if you can make that transition, I'm telling you, it's 100% worth it, and both Jeff and myself and Bryan have all made that transition. And I would imagine all of us would say the same thing, that it was 100% worth it.
Raphael, you nailed it, man, on a couple of things there. First off, having the mental acuity to do it. It's all about your mindset, my friend. It is all about your mindset. We could spend a whole podcast on that. I'd be happy to. But it's also, it's interesting. My belief is we're almost all hardwired to be entrepreneurs. It wasn't that long ago, basically pre-industrial revolution. We all were. That's what everyone did. You kind of grew up, you went off, you apprenticed with whatever it is you wanted to become. And then you opened your own bread making store, blacksmith store. That's what we all were. And I remember when I was going through that, and I kind of looked at my days at CBRE as my apprenticeship in the industry. I had folks be like, wow, that's an interesting way of doing it. I've never thought about that. And we used to all do it. It used to happen for everyone that got into business. That's how you learn, was on the job training as an apprentice before you started your own firm. So it's just interesting the way the world has transpired over the past 100, 200 years. But we're still working on a chassis and kind of a mindset of, we were all born entrepreneurs. I really believe that. So the folks that can get over that mental hump, it is an exciting adventure on the other side.
That's awesome. One thing that I wanted to ask you is now let's transition over to, the private equity side and things that you've been doing over the last 18 months or so. As I remember when you guys were first starting out, I spoke with Tyler and I spoke briefly with you guys, and you were mentioning about, the amount of deals you guys had to look through in order to find something. Right. I imagine it's somewhat similar in this current environment, but could you kind of talk to us a little bit about, some of the hurdles you guys face analyzing opportunities, and then really what characteristics of deals that you analyze really get you excited about an opportunity?
Yeah, well, it's an interesting time to be in the commercial real estate field, specifically in the multifamily space. We've had a global pandemic, and it has just done nothing but drive prices higher in our world. So, of course, humanitarian to the side, we thought that COVID was going to provide some sort of discount in pricing. That COVID discount in the multifamily space has turned into a COVID premium. So what you've had is, big, large institutional investors kind of pulling out of certain industries like hotel, retail, some office, and that capital has to find a home, and it's finding a home primarily in the multifamily and industrial space. So same amount of product out there, more dollars chasing it, simple supply and demand, pricing's going up. So Tyler probably mentioned last time, and for new listeners that didn't catch that episode, a lot of times we say for every 100 deals that cross our desk, we like to fully deep dive in and underwrite about 30 of those deals. Once we get through our full robust underwriting, typically plus or minus 10 of those meet our investment return metrics. Of those 10 that we offer on, we hope to win one of them. I think those numbers have been skewed away from us a little bit. If I had to be honest, I think it's more like for every 150, 200 deals, we're probably underwriting 50, offering on 15 and winning one right now. It's just a competitive landscape. There's a perception of safety in the multifamily space that's bringing a lot of institutional money to our space, with the addition of there's just been a monumental amount of capital brought into the system over the past 12 months. I think I heard something the other day that 40% of the dollars in today's economy were produced in the last 12 months. which is amazing to think about. So that has ramifications that we deal with on our end, because there's so much capital in the space. It's pushed people so far out the risk curve. You have, return metrics that are compressing. And then on the flip side, what we're acquiring is these multifamily units, and you have tenants that some of them are still going through some distress. So it's an interesting time, but a fun time to be in the market. There's always opportunities there for us. It's just a matter of being disciplined. We always say that, we can never eliminate risk. We're just trying to manage our risk on our side. And Raphael, you mentioned we have been active. We've picked up a couple deals in the past, just in Q3 that just ended last week, I guess. We picked up 2 new deals, about 400 units last quarter, which was great. So as competitive of a landscape as it is out there, we've been blessed to find some pretty attractive opportunities for our investors. And again, it kind of gets back to the relationships that I talked about earlier. Our last deal was direct to seller, which is very unique in this environment. The deal before that was a pocket listing from a broker, which means, they weren't blasting it far and wide. They just kind of came to a couple groups that they were confident could get the deal done. And we were one of those groups. So again, it's all about relationships. And we say this half in jest, half serious, but we're not really in the multifamily commercial real estate space. We're in the relationship business. Multifamily apartments are our widget in our business. So we are all about relationships. And that's truly how, we kind of try to separate ourselves from some of our colleagues and competitors.
Yeah, it's true. And for those of you guys who don't know, like they've been working their tails off since the beginning of COVID. And, at least initially it was probably disheartening, like the amount of effort you guys were putting in and not seeing the results of that effort. But you guys, like you said, have been able to take down 400 units just recently. And I mean, the sky's the limit for you guys. I really do believe that. So that's awesome.
Yeah, I appreciate it. And it is, you have days where we kind of joke and we say we're in the trenches right now and just, taking it on the chin, and you get through, the 29th deal just to see the 30th deal get past you. But it gets back to, again, Raphael, what we talked about. It's all about mindset and discipline, and no deal is better than a bad deal. So I'd much rather just keep saying no than buy one just to stretch and say that, hey, we got one. It ended up becoming a bad deal, because no deal is much better than a bad deal.
Yeah, no, you're right.
Absolutely.
And the bad deals show their heads when there's a correction. And I think we all agree that at some point in time, there will be a correction. I think the optimism that everyone has about it, the investment landscape is obviously warranted right now, but who knows in the next 12 to 18 months. So if you make a decision right now that could come and bite you in 2 years, I mean, I think you're right. I think the discipline approach is the way to go, because at the end of the day, a bad deal for your clients is a bad deal for you, and it can damage, reputation long term. And if you're in the business for a long haul, I mean, that's the most valuable thing you have. So
yeah, absolutely. Yeah. And I mean, we'll be doing this for decades to come. And I think it was Warren Buffett that said, you never know who's swimming naked until the tide goes out, and I think that's directly relevant in today's environment, because you do see some folks that are getting a bit aggressive. Now, maybe they'll be rewarded for that, and they're smarter than us. But at the end of the day, we're all about protecting capital and protecting the downside, and it all comes back to discipline.
Oh yeah, you guys definitely with those metrics, the 200 down to, getting down to 1. It's a huge stretch and a lot of sifting through. That's a lot of grit. And
it is. And Jeff, it kind of gets back to what I was saying earlier too. It's we love doing it. I love looking at multifamily deals. If I were looking at 200 retail deals, like that just wouldn't be for me. I would have been burnt out 198 deals ago. And so it's finding what you truly are passionate about and love to do. And Tyler and I, we love delivering for our investors. We love improving these properties. We love turning them around for more than just the dollars, but these are actual homes and communities. And it's what the tagline of our firm is: elevating communities together, because this truly is a team effort. And what we're doing not only delivers results for our investors, but it makes these individual properties in the surrounding neighborhoods better places to live. So it's important to have something behind just the numbers on the spreadsheet to kind of keep you going during some of those times where it can get a little long in the tooth.
Absolutely. So I know on each deal, right, you guys are raising capital. So what are some of the strategies? I know myself and Raphael and people that are listening and watching this are curious that you guys use to raise your capital on such deals that you guys find.
Yeah, so we're raising, anywhere from 2 to 3 on the bottom end to 8, 9, 10 million on the top end for each deal. How do we do that? Again, my friends, it's all about relationships. I mean, all of our investors we've known for, years. And this is not something that we just call folks up and say, hey, we've got this deal. Look at these great return metrics. Are you in or are you out? Write us a check. This is something that we've been doing for years. And I'd liken it to kind of farming, where we're out there, we're planting seeds, and you may plant a seed today that you won't harvest for years to come. And that's just something that you have to be comfortable around, because those are the kind of relationships that we want. We're all about long-term relationships. Typically, if we're having an introduction with someone, whether that be call, coffee, lunch, whatever, we don't even bring up a deal, because at that point, we're just trying to see if we're a fit for one another, kind of strategically, mindset-wise, to say, are you the type of investor that we want? Because as much as we want to present opportunities to our investors, we want the right investors in our deal. So they have to have the same acquisition criteria and return metrics in mind. And it's really just about those relationships and developing those and getting to know one another, and to say, are you a right fit for me? And am I a right fit for you? Because we are, getting back to your question, we're raising private capital, typically from high net worth individuals. We do have some family offices and more institutional partners we will do deals with together. But for those individuals, man, it all comes down to relationships and trust, really. Because at the end of the day, they are entrusting us with their hard-earned capital, and they want to make sure that they know and align with the folks on the back end and the ones that are operating these properties.
Oh, for sure. And I'll even say that you guys have had a phenomenal, you and Tyler both do a great job of like getting information out there, becoming that water trough of people that are interested in learning about these different concepts. And obviously Tyler has his Elevate podcast. You guys have been doing a lot of blog posts, and you guys run a meetup locally in town where you talk about different multifamily concepts. The most recent one, which I thought was super interesting, was the affordable housing meetup that you guys ran. I mean, it's just all great information, and those touch points, those nodes over time build a massive network, and I think that, I think the mindset of people that if you guys are listening to this is that it's a long game. It's a farming. You're a farmer. You get out there, you build all these nodes, you build these relationships slowly but surely, you nurture them over time. And then eventually an opportunity may present itself where one of these nodes decides, hey, this may be a good opportunity for me to be part of this opportunity. And that happens. But again, the effort that you guys place years ago is now coming to fruition today. So just wanted to reiterate
Raphael, appreciate you saying that. And it's interesting. I'd say that we're a little bit different in the industry. A lot of folks over, previous years and decades have not had quite the abundance mentality that we do. And we do willingly give away information because we want to help educate folks. And we've had other operators come to us and say, man, what are you guys doing? Like, why are you telling everyone what you do? And it's like, well, there's no curtain. There's no peek behind the curtain. Like it's open from our end. Like these are our partners. And we've had investors come to us and say, well, would you be willing to share this? I assume not. And we're like, why wouldn't we? Like, absolutely. You're a partner in the deal. Like, of course, like you've got free reign on all this. So it gets back to that mindset, that abundance mindset that Tyler and I, have. And what I think is so beautiful about our industry, I always say that we don't have competitors. We only have colleagues. Like, yeah, sure, maybe you and I are, bidding against one another on this specific property or opportunity, but on the next one, we could get together and do it, co-GP a deal together. So it's an interesting industry that we're in, and it's starting to come around. Historically, it's been much more of this is my information, don't look behind the wall and stay out. And we've had some colleagues that have kind of taken the arrows and been the pioneers to break down some of those barriers. And we're just trying to do our best as well. And that really helps accelerate and create that trust in those relationships, is by openly sharing and openly educating. And ultimately, when we're educating, we end up getting educated along the way. So really all parties win in that type of mindset.
100%. And you break down the barrier, like you were saying. I mean, at a certain point, there will be an inflection point where those who do not share are the ones who are left behind. Because again, we're in an information age. People are constantly looking for data points and information in order to make better decisions. And if you become that water trough that people go to, you become that go-to expert. And that trust factor is immediately established. What you guys are doing right now, like for example, with this podcast, this could be something that someone hears and they decide to reach out to you guys, and who knows what relationships come about. But that's just from the effort of sharing great insights with the audience. And so I can't stress enough how important it is. And I think especially our generation is really taking that as a calling card and saying we're going to be sharing as much information as we can with those around us. And I think the sky's the limit. So to round out things, I wanted to kind of get your insights on the multifamily industry as a whole, in particular going forward, because obviously we've gone through a period right now where, we're hopefully near the tail end of COVID. And I keep saying this on every episode, but it just seems like it just keeps getting pushed down the road. But at some point in time, we're going to come out of this, and, at least from a case perspective, we'll stabilize. But where do you see multifamily going over the next, 5 to 10 years? And I know you have a background in economics, so this is probably something you're constantly thinking about. But I thought I'd get your take on the industry.
I've never been more bullish on the industry than I am right now. Peter Lindemann is a world-renowned economist that Tyler recently had on his podcast, and I was listening to him on another podcast recently. And the economics nerd in me does love just digging into some of those details and demographics and looking at it from a macro perspective, because as in the weeds as we are every day and deep diving line items on our pro forma on specific deals, some of my favorite parts of the business are rising 20,000 feet above that and say, where are we at? Where are we at as an industry? Where are we at as a nation? And just kind of, how does this all fit together? Because there's so many pieces of this puzzle, and none of us really know the end game. I mean, I don't have a crystal ball to look into and say, this is what I know is going to happen over the next 5 to 10 years. Now, I love synthesizing all that information and saying, this is where I believe we're going, and the winds are blowing this way. So let's not fight against them and just set our sails over here and ride the tailwinds out. But man, I'm extremely bullish on it from an investment perspective. I think that the amount of capital that has been pumped into the economy over the past year and a half, you've really got to follow where that money's going to. Will we see inflation? I think universally people have agreed, yes, it will show up. Now, my question is, where does that show up at? Is it going to show up in your milk and bread and at the gas station? Yes, it will, nominally. If you really follow where the money went, it went to these big institutions. Look at who was getting, the 8-9 figure checks. And so those type of institutional players are sitting on more capital and more what we call dry powder than ever before. So I think what's going to happen is you're going to see increased competition. You're going to see return metrics come in some in our industry, because you have this weight of capital that's out there, and it has to be placed somewhere. So these folks are going to be willing to take on less return for the same amount of risk than they have historically. Now, part of that, I think, is the maturation of our industry. I mean, if you look at the stock market years and decades ago, everyone wanted, 20% returns. What is it now? Everyone pro forma 7-8% annually or something a year. It's in any industry. Increased competition and increased institutionalization compresses return metrics and brings those in. So I think that in the multifamily space, you'll continue to see a crazy amount of demand from investment dollars. I think the real asset inflation will show itself in our space. But as investors, inflation isn't quite the dirty word that it is for individuals. We can borrow long at historically low rates. I mean, we're getting quoted on some of our deals, 2.9%, 3%, sub 3%, 3.5%, whatever, crazy low rates. They can be fixed and paid off in future dollars that are not adjusted for inflation. So I think everyone is seeing that from an institutional level. Also, we're living in a time of 4% cap rates, 5% cap rates, 6% cap rates, and again, historical lows from an investment perspective. But what people need to look at is go to international cities, go to London, go to Paris, go to Hong Kong, Beijing. They have like 1% and 2% cap rates. So what's happening is you're getting big, crazy, large institutional and national pension funds, endowments coming stateside that are international players and finding themselves in, the gateway cities in the United States, like your San Francisco's, New York's, Miami's, places like that. Well, I kind of call it the spillover effect. The groups that used to buy in those gateway markets now go to primary markets. Your Dallas, your Phoenix, your Atlantis. Well, again, you get pushed out of those markets, and then folks are going to Nashville and Charlotte. So you've just got this compounding capital coming from all different sides right now. You've got historical low interest rates, and I think it's feeding the fire right now. So from an investment perspective, I'm as bullish on multifamily as I've ever been.
100%. And even the supply side for developers, I mean, that's one of the things that we're facing as far as, construction of properties.
Absolutely. That's
crazy.
A huge piece to talk about right now is historically in the United States, we have been underdeveloped in both single family and multifamily. So we do not have enough there's not enough roofs out there to, put over everyone's head. Well, we now have these crazy high lumber prices and things like, copper going up right now. So it's now more expensive to build, which to me says we're going to continue undersupplying. So what we have left, it's simple supply and demand. We're going to keep growing as a nation, but our, single family and multifamily homes aren't going to be able to keep pace with that. So you're going to see that in rents, and the residents that are out there that are able to pay those rents, are going to be fighting for doors that are going to be very, very much in demand in the future.
100%. It just continues to increase the price of existing inventory. I mean, and especially, given the supply chain issues that a lot of developers are facing across the world, really. I agree with you. I foresee us being in a very low supply environment for quite some time. And even if interest rates do decide to tick up, which the Fed, has not really given any indication that that's going to be the case, at least in the near term, I mean, you're still going to see, a strong enough demand to where supply just can't keep up. So I'm kind of
And again, Raphael, just to dig a little deeper in the weeds there, like we may see rates tick up some, but what people need to look at is what's that difference in the spread between rates and cap rates. If you look on historic charts, that spread is as wide as it's been in over a decade. So, a tick up in rates is going to almost normalize the spread in between interest rates and cap rates. So if I'm thinking in bets, what's more likely, cap rates to go up, cap rates to go down, which, therefore influences pricing. I think it's more likely than not that we continue to see cap rate compression and rates going down with that monumental amount of capital I just spoke about, further, driving prices up. So I'm completely with you, my friend.
I agree with both of you guys. I mean, that from a general contracting standpoint and supplies there, it's been pretty tough, but we'll get through it. It's coming. I think it'll catch up eventually to where supplies will be able to regain their strength of normalcy to a point. So we'll see. But to start the round off, Bryan, what we like to ask, and I know I like to ask this, is I know you mentioned Rich Dad Poor Dad earlier on. And so we like to ask, what's one of the most impactful books that you've read?
Yeah, I'm a voracious reader. I love it. With a couple of kiddos, I find less time late at night and early in the morning, but I've become a big Audible guy. So I've been listening to books, and I'm a big health guy, so big into working out, and it's great to be able to go hit the gym or go for a run and be able to take in some information. So I feel like I'm constantly reading books. But as far as, kind of the staple books and books that I would highly recommend to folks that if they haven't read these, I think we've talked a lot about mindset today. Napoleon Hill's Think and Grow Rich is, I'm sure, a book that's come up on this podcast and just an absolute staple. For folks that find that book a little difficult to read because it's not a super easy read, it's pretty dense, but it's extremely, extremely valuable. Don't let that scare you away. But what I would say, a nice supplement to that is, in talking about audio, I listen to something by Earl Nightingale at least once a week. So I try to get through this 52 times a year. The Strangest Secret is the name of it, by Earl Nightingale. It was recorded, I don't know, in I think the 50s. It is still as important as it is then as it is today. So that is a big recommendation from me. Other books, Who Not How by Dan Sullivan is a book that I love on a personal and professional level. It's all about, the title says it all. It's all about kind of working with and partnering with your quote unquote who's and not getting caught up in the how. And I think as an entrepreneur, that's something that everyone struggles with, is you're presented with a problem and you say, oh my gosh, how am I going to figure this out? How am I going to get over that? And this book helped me kind of fundamentally shift my thinking and say, no. Don't worry about how we're going to get over that. Who can help us? Who can we use that has that knowledge, or who is looking to help solve that problem that we can go out there and partner with? So that's been a really big one for myself, for my wife, my business partner, like everyone in my inner circle. I can't recommend that one to enough. And then let's go with one more, Traction by Gino Wickman. And I mentioned that one because they run on the EOS Entrepreneurial Operating System. Any entrepreneur that feels like they're chasing their tail and needs an additional, 4 days in the work week, this is your book, because it, I know, helped kind of put some guardrails on our business. And I can't speak to how impactful it has been for us. And Tyler likes to laugh at me, but we've brought Traction into our home place. Like my wife and I, anyone that's read Traction, like it teaches you how to have 10-year, 3-year, 1-year goals and plans, and drill those into quarterly, what they call rocks, which are basically goals. But not only do we leverage that in my family on the business side, but on the personal side as well. So if folks want to go further than that, I'm always happy to recommend more books, but those are some of the staples, 4 or 5 that I think everyone should dive into if they haven't already perused.
Yeah, Traction. Oh, yeah. I'll echo that. I think it's one of the best books I've read, in particular for entrepreneurs, because like you said, clarifying the vision and then getting clear on what your goals are, and then holding yourselves accountable to hitting those quarterly metrics is a game changer, really. And the Who Not How as well. I haven't read that book, but that mindset shift of not having to do everything yourself. That's something that I struggle with even to this day. It's like where I'm taking control of something, when in reality it's like, is this really where I should be focusing my energy, right? Because there's plenty of other people out there. There's plenty of other people out there that can do it way better than me, more efficiently, and then I can utilize my strengths and my talents.
And Raphael, they want to. That's what that fills their cup up. It's things that you hit your head against the wall and say, oh man, how am I going to figure this out? There are people out there that are saying, please bring me that issue, because that's what I want to do. That's what they're passionate about. So I highly recommend that to you, Raphael. Pick that one up, because you hear it and you're like, oh yeah, I kind of get that. And it's an easy read, but it is an impactful read to wrap your mind around that and really start thinking that way. And it's super powerful.
That's awesome. Yeah, I'm going to pick that up. I actually listen to a lot of audibles as well. I actually bought additional credits. I do like 2 credits a month, and I ran out. So I bought some more credits.
My wife and I like fight over them. I think we have like 3 credits a month, and it's always like a race to who can get them fast enough. But no, man, that's great to hear that you're a Traction fan as well. I wish I could read as much as him. He is a voracious reader as well. And again, kind of what's neat about our business is we take all these tools, and it's not like, okay, well, I'm done with that one, let's use this one now. It's let's go, instead of going horizontal, let's go vertical with these and say, wow, that's a phenomenal book. Let's layer that onto the business. And man, I like the way that, they approach that subject and that thought process. Let's stack that on what we're doing. And I think as entrepreneurs, like it's so great to be able to go out there, read books. And most of, I basically don't read any books on multifamily specifically. I'll read business books or other books about entrepreneurs and say, hey, how'd they do things? How'd that guy do things? How'd that female do things? And bring that and stack that on and layer that on to your business.
Oh, 100%. And I'll even echo this as well. That's one of the reasons why I love reading biographies, especially from people who have done like ridiculous things in their life. Like, Shoe Dog, the gentleman who started Nike.
Yeah.
We had the Ride of a Lifetime, Bob Iger for Disney. You have, Sam Walton, Made in America, like all these different books where you understand the thought process of those ultra successful individuals because they didn't get there overnight. It was an ideology, a thought process that they employed over a multi-decade career that enabled them to be able to be where they are at that point in time. And so, that's one of the big reasons I read biographies. I love reading biographies of presidents and world leaders and stuff too, to kind of get their perspective on how they approach day-to-day life. So great tip. So first off, really, Bryan, we want to thank you so much for stopping by the podcast. It really means a lot to us. And I know our audience gained a ton of value from it. But before we round it out, we typically, what we do is we ask our guests to provide something to the commercial real estate treasure chest. Essentially what this is a repository of resources that we make available to our listeners for free. Typically they're like PDFs or, Excel sheets or really anything that you think would be of value to our audience. So what are you willing to contribute today?
Yeah, absolutely. Well, kudos for you, Guy, and honor you all for pulling that sort of valuable information together. And thank you for letting us contribute to it as well. But Tyler and I wrote a book. My business partner and I wrote a book, The Bottom Line. It's called 10 Ways to Increase Cash Flow in an Apartment Complex. And it all goes back to that abundance mindset and say, hey, this is how you do it. This is the peek behind the curtain. This is the way that we add value to our investments. This is the way you can do it as well. You can pick that up at our website, CF Capital's website, which is cfcapllc.com. So cfcapllc.com. The Bottom Line, 10 Ways to Increase Cash Flow in an Apartment Complex.
That's awesome. Yeah, and we'll include that in the show notes below too. So if you guys are listening to this in podcast format, feel free to click on the link. And if you're watching this on YouTube, it'll be in the YouTube description as well. So.
Yeah, again, Bryan, thank you so much. We really appreciate all your time and your insights and just knowledge. From you and Tyler both, just absorbing so much knowledge and then just abundantly, like you're saying, you're freely giving it out, and it's going to pay off huge dividends at every single year that you guys continually do that. And I know more people are going to want to contact you and get in contact with you. What direction do you want us to send them in?
They can reach out. They can come out to our website where they can sign up for our newsletter. We send out kind of a state of the market every month, and we're constantly communicating with our investors and any prospective investors that want to sign up for our newsletter. Also very active on LinkedIn, Instagram, across social media, really. So we'll get you guys to dump all that information into the show notes as well. But LinkedIn is somewhere where we're constantly posting blogs or, jotting down thoughts, interacting with our colleagues and our investors, our friends. So across all platforms, we're happy to engage with the listener base today, and appreciate you guys having us on and spreading the good word today. You guys are doing fantastic work, and just honor you for that.
Awesome, man. Yeah. And if you guys are ever local within Louisville, they do run a meetup in town as well. And they usually have phenomenal guests. What is it usually the second Thursday of the month? How do you guys usually do it?
Third Thursday. Yeah. If you're in Louisville or find yourself in Louisville, we'd absolutely encourage you. We have a monthly meetup where we have folks from across the industry in the multifamily space, but it could be developers, investors, owners, brokers, lenders, insurance folks, anyone who touches our industry shows up, and we typically get a pretty good attendance there. And the essence of it, Raphael, was, hey, we all see each other at these conferences and industry events, and you see one another in passing, and it's, hey, how you doing? You talk for 60, 90 seconds. Nothing ever really gets accomplished. It's kind of the pleasantries. How's the family? That said, let's create a forum for people to bring best practices, share any sort of opportunities they have, learn, listen, enjoy a beverage together, and say, hey, raise your hand. I got this issue. What's happening here? What do I do? Who do you all recommend? Not how do I figure this out? but it's a way for us to all get together and say, you know, like, I've done that. I ran into that. It was a pain. This is how you figure it out. Call this group over here, vice versa. So it's just a cool platform of abundance-minded folks in our industry. So again, yeah, if you're in Louisville, please come out, please come say hello, and please come add some value to the group.
Oh, for sure. Yeah. And I'll vouch for that as well. I've been to several of their meetups. I mean, since you guys started meeting in person, I've been to almost every one, I think. And I can definitely attest to the fact that they do provide a ton of value. And the people that do attend are, you know, they're heavy hitters. You know, these are great people that are really of that abundance mindset, that are really, you know, focused on improving on each and every day. So if you guys are in the Louisville area, feel free to stop by. Okay. Well, first off, again, Bryan, thank you so much for stopping by. We really do appreciate all the insights you did provide to our audience. If you guys are listening to this in a podcast format, please leave us a 5-star review. It really helps with the algorithm and ensures more and more people can listen to our episodes. Along with that, if you're listening to this on YouTube, feel free to like and subscribe to the channel. It really helps with the YouTube algorithm and ensures more and more people can hear this message. So thanks again for stopping by, and we'll see you all next time.